Good evening, Lake Forest, and welcome to the City of Lake Forest Finance Committee meeting of July 17th, 2017. I would like to advance from our regular council meeting to the first item of business in the Finance Committee is the recognition of one Stephen Christie, Jr. And in that regard, I would like to read a resolution. Stephen. Whereas Stephen F. Christie, Jr. recently retired after more than 3 decades of involvement with and service to the Lake Forest Open Lands Association, and whereas Stephen served as the first executive director of Lake Forest Open Lands, which I think dates about from the Garden of Eden, but it's been a long time. Yeah. And whereas Stephen worked tirelessly to preserve open space, high-quality prairies, woodlands and wetlands, and to establish nature preserves and miles of walking trails in our community. Whereas without Stephen's vision, planned preservation subdivisions such as Melody Farm, Everett Farm, and Middle Fork Farm may never have been developed, and instead developments with conventional lots and little to no preserved open space would be in their place. And whereas Stephen, in his service to Lake Forest Open Lands and the Lake Forest community, was humble and gentle and kind. He was a giver and asked for little in return. And whereas Stephen leaves a lasting imprint on the community of Lake Forest and leaves the gift of open land preserved in perpetuity, and whereas the current and future residents of the city of Lake Forest will long reap the benefits of Stephen's efforts and his passion for the community, and now therefore be it resolved by the City Council of the City of Lake Forest that the council, on behalf of the residents and city staff, hereby expresses its sincere appreciation and gratitude to Stephen F. Christie, Jr. for a public service faithfully and selflessly performed. And be it further resolved that this resolution be appropriately inscribed and conveyed to Stephen F. Christie, Jr., and instruct the city clerk to include a copy in the official minutes of the July 17, 2017 meeting of the Lake Forest City Council. Signed, Robert T.E. Lansing, Mayor. Stephen, come forward, please.
Did you see? Did you get it?
Everybody. Yeah, get everybody. Hello. Can I be part of your picture? Yeah. Sure.
Wait, I'm coming.
Yes, Melanie, you get it. Please do.
Okay.
Behind you.
All right.
First behind you.
Someone organize this.
Back there.
Go ahead. You get next to me.
Where's Sue?
She's right here. So you guys are.
No, you need to come forward.
Oh.
Forward how?
Here. Actually, okay.
Look in there as well. Come in your mail.
I think I got it now. That last one should be good. Thank you.
Thank you.
Thank you all. Robert, I haven't seen you in so long.
I know.
I don't usually get on this side of the fence with the old days.
Only for a few minutes at the back.
All right, with that, I'd like to formally call the Finance Committee meeting to order, and will the city clerk please call the roll call?
Mayor Lansing,
Here?
Chairman Morris is absent. Alderman Byler,
Here.
Alderman Newman,
Here.
Alderman Rummel,
Here.
Alderman Tack,
Here.
Alderman Reisenberg,
Here.
Alderman Moreno,
Here.
and Alderman Bushman is absent. Mr. Chairman, you have a quorum.
Thank you. Jed Morris is not with us tonight, and therefore I'm standing in as Finance Committee Chair. First order of business is consideration of the minutes from the Finance Committee meeting held on April 17th. Any comments, additions, deletions? Seeing none, may I have a motion to approve?
So moved.
Second.
All those in favor?
Aye.
Opposed? Motion carries. Next item of business is the annual Cemetery Commission report, presented by Dennis O'Brien, Cemetery Commission Chair. I might just read from Section 11 of the Lake Forest Cemetery Commission Investment Policy, which states that the Commission Chairperson shall periodically, at least once a calendar year, report to the City of Lake Forest Finance Committee. The report shall include cemetery portfolio performance and conformity of the portfolio and portfolio activities to policy guidelines. I dare say you have that with you.
Yes, I do, sir. Good evening, Mayor Lansing and committee members. I am here to provide you with the annual Cemetery Commission financial report. As in prior years, I've provided to you our mission statement and our investment policy. I ask you to read that at your leisure. I wish to move forward to the results of our investment activities for the fiscal year ending April 30th, 2017. As you can see down at the bottom of the slide, our asset growth was 21.6% for the fiscal year. As reference, the Dow for the same period of time grew at a rate of 18.1%. The S&P 500 grew in value at a rate of 15.4%. So we clearly beat those two benchmarks. The other thing to point out is when we started our investments, we were at 3.1 million. We are now at 6.8 million. So over approximately a 9-year period of time, our investments have grown by 118%. Another point I'd like to make to the committee, is our portfolio as of April 30th, 2017, our U.S. equities make up a little over 53%. We made a decision a year and a half ago to change our investment philosophy for our large cap investments. We moved our large cap, which makes up a little more than 50% of our U.S. equities, into the Vanguard Mega Growth Fund, which is a passive investment fund. So overall of our complete investments, about 35% of our investments are in passive. Our fixed income investments of 9% is in an active managed William Blair bond fund. Our international equities, which are about 16%, are held in two active managed funds, one by Blair, the other by Hartford. Moving on to the next slide, our investment policy has ranges for our investments. As you can see on the far right, our policy ranges for investment. We made a decision a few years ago with the volatility of interest rates to combine our cash and fixed income portfolio as part of our fixed income policy range. So if you look at those two amounts, we're at 30.7% of our portfolio, which is in the range of 20 to 40%. So taking that position, our investment portfolio, based on investment ranges, are within our policy guidelines. We've mentioned the past couple years, because we're patting ourselves on the back, that as of December 2014, we were free of any debt obligations. With that, I open up questions to the Finance Committee.
Thank you for your report and impressive returns on the investments, which is good. I know that's a piece of what you do and certainly a piece you're talking about tonight. William Blair has been the advisor for some time, and I'm trying to remember how recently. I know when I was on the Cemetery Commission, the whole time, it was maybe, I can't remember how long I was on, a couple of terms. William Blair was there. Do you do periodic requests for other advisors, or look at that from time to time?
Yes, we do. Roughly a year and a half ago, we had proposals from 6 different investment firms, including William Blair.
Oh.
The decision by the commission was William Blair was the best fit based on investment fee rates and their performance over the past years that they were dealing with us.
Good, good.
And
Yeah, I
with
couldn't
the
figure
move
out that.
to moving 35% of our investments into a passive, we've dramatically reduced our fees for investment advisory.
Okay, good, thank you.
You know, if you could go back, I think about 2 slides, I had one, I think a question, it blinked by me here. Under fixed income, you have a policy range of 20 to 40%, and you have a box here that because of the exceptionally low yield, you didn't want to get caught with a principal reversal there and so forth. But was that, how formally was that handled, you know, to move outside of range and
It
you know, how did that
was-
process come about?
The commission put it forth to a vote, and it was officially approved, and it's in the minutes of the commission to allow the cash and then fixed incomes to be considered part of the fixed income investment range. And that was through consultation with William Blair.
Okay, so they were integrally involved?
Yes.
Yeah, okay. Yeah, well, makes sense. Any other particular questions, thoughts, observations? Well, thank you very much. That's pretty remarkable. If we can get all aspects of the city to jump 21%.
I wish I could
Except-
say we will do that again next year, but we'll do our best. and-
Oh, you didn't warrant that. Oh, yes, right. Understood. Right. Thank you very much. Well done.
Thank you. Good evening.
Next is approval of the fiscal year 2019 budget calendar, which is been drafted by Elizabeth Holub, Director of Finance. Elizabeth, do you have particular comments, or the
No,
calendar
it-
speaks for itself, I think, largely?
I would just reference you to page 27 of your packet, which includes the proposed calendar. It anticipates no significant changes in process or timing in the budget process, but does include the special city council workshop in September, which will be budget-related discussion before we enter into the FY19 budget process. So I'm happy to answer any questions.
Any particular questions, thoughts, problems with this? All right, may I have a motion to approve this?
So moved.
Second?
Second?
Is this a voice vote? Where's Biddy? Voice vote. All those in favor?
Aye.
Any opposed? Hearing none, the motion carries. Thank you. Next is consideration of investment policy and investment procedures for the Police Pension Fund, to be presented by Charles Flesch, Police Pension Board, and Doug Ost of Marquette Associates.
Good evening. Well, thanks for inviting us here to give you a brief overview here. Hopefully I've put forth what you're looking for, and I'll talk a little bit about the state statute. I'd love to have a 21% return too, but unfortunately we have a different restrictions for our funds. But just real briefly, I'm guessing no one's familiar with Marquette. Just a couple of points on us here that you can read at your leisure, just in way of background of who we are. Also, with regards to our experience, we represent around $3 billion in assets in just Illinois police and fire funds. So we're well versed with the Illinois state statute and the codes that need to be abided by. With regards to our approach here, just focusing on downside risk, we use a very efficient portfolio structure. We use a lot of indexing where we think it's appropriate. One of our main goals is to keep fees very low. All-in fees for the pension fund are below 0.5%. Including all asset management, custody, and our fee included. And then lastly, and probably most importantly, is avoiding any unintended risks. As you all know, investing, there's lots of risks involved with doing that. We want to make sure that we know all the risks that at least we're taking and try to avoid anything unintended. So the current asset allocation versus its policy is here on page 5, and you can see that we're pretty much right in line with our asset allocation policy. One thing to point out here is that fixed income number. You'll see it's quite a bit higher than what you saw in the previous presentation. The state statute mandates that the fund have at least 35% of its assets in investment grade fixed income. So unfortunately, we cannot go as high on the equity side, but that is, we do what we can within the state's governance. In terms of history, the state statute's changed over time. So you can see that the asset allocation of the pension fund has changed over time as well. The blue here on the bottom of the page you can see is fixed income. The prior state statute, you had to have 55% of your funds in investment grade fixed income. That's slowly been relaxed down to now where it is at 35%, but you can see the pension fund has kept up with that trend. Again, expectations for fixed income aren't quite high as of late, so the fund wants to take advantage of being able to invest in the equity markets. In terms of returns, this is net of all fees as of April. You can see not that 21%. Again, fixed income is a pretty heavy weight on the portfolio as interest rates did rise over that point of time. But you can see just shy of 10%. And over the last 10 years, around 5.3%, again, net of all fees. In terms of the market value changes, this is the last 10 years. You can see that at the beginning of it, 10 years ago, roughly $18 million. Since then, cash flow has actually been slightly negative over that time period, so money has been being pulled out of the pension fund. And then you can see the investment change up around $13 million to get to where we are today at around $30 million. Next page just shows the growth of the dollar again. The one thing to point out here is that during the financial crisis, the pension fund did outperform. Historically, the fund has had a fairly conservative stance, trying to protect on the downside a little bit more. And you can see that over the course of time, the pension fund has outperformed its policy benchmark. And then lastly, on page 10 here, just looking at not only the returns, but also the risk of the portfolio. There's a couple of things to point out here. The total fund is that square. The policy benchmark there is the diamond. And then that triangle is the median public pension fund. As one of the things that we do is evaluate the fund relative to peer groups. That represents the median public pension fund in a universe called InvestorForce. It represents around $500 billion in public pension fund assets. And so it gives you an idea of what the median public pension fund out there has done. You can see that the pension fund is significantly less risk over the last 10 years than the median public pension fund, but has managed to actually outperform during that time period as well. And then lastly, in what we consider fairly important is fees. As you know, every dollar that comes out of the pension fund is taking away from returns, so we want to make sure that we keep fees as low as we can. And again, all-in fees are lower than that 0.5% I referenced earlier. That's all I had prepared today, unless anybody had any questions.
I have a question. Question for Elizabeth. What is the rate of return assumption we use with the actuary? Is it 6.75 or 7?
We currently use 7% for both police and fire.
Okay, so back to Doug. This came up in an earlier discussion with Elizabeth. If we have a 10-year observed rate of return average of 5.5%, have you stress tested the cash flows on this portfolio based on, I think, a liability growing at 8.5 or 9? Where do those lines enter? Where do we run out of money?
Yeah, you're not in any, we're not an actuary, so I won't answer it in that terms, but, you know, the last numbers that I've seen on their end, you're not in any imminent danger, obviously. The assets are pretty robust relative to your net monthly outflows. But you're absolutely right in that over the last 10 years, particularly with the financial crisis, there's a definite gap between the actuarial rate of return that's assumed and the actual experience of the pension fund.
Thank you.
I know the state pension system in the main is very much in the firm grip of the state of Springfield and the legislature, but on that matter of fixed income requirement of 35%, that's, I would imagine, highly defined as being an actual investment holding in a bond, which can go south in principle, even though we're out in the fourth standard deviation of interest rates. And cash cannot be. So maybe I've answered my own question, but
Yeah,
I just want to point out the policy challenge we have.
it's something that, you know, as a fairly large investment consultant in the industry, we definitely have brought that up a few times and are, you know, we're thankful that over the last several years that it's been relaxed down to 35%, but it's something that, as you all know, there's challenges ahead in fixed income, and that's something certainly that we would love to see it reduced a little bit more.
Well, better late than never, but
Is the, with returns so low in fixed income, is the basic strategy a laddered high-grade corporate bond?
We're shorter duration than the broad fixed income benchmark, but it's a government credit strategy. A pretty conservative strategy right now, but it's I would say it's intermediate duration relative to the broad benchmark.
other thoughts, Michelle?
Could I ask you to give some perspective on the real estate allocation?
Absolutely.
What is the nature of that investment? When did it start? And what's the longer-term plan
Sure.
for that allocation?
So it is. You can see it right around 2014 is when it started. Its principal is the manager. Due to the state statute, there's only a few different ways you can invest in real estate, but this is actually an open-end private real estate fund. So it's it's a well-diversified, geographically diversified, only in commercial real estate. So it's apartments, office, industrial. So it's a broadly diversified institutional fund. And in terms of plans, it's one of the few ways that the pension funds under the state statute can diversify outside of just purely stocks and bonds. So right now, for a while, we had actually been overweight to real estate because the returns had been very good, but we've been making sure to rebalance back down to targets. So right now, the plan is to continue it as a core holding in the pension fund, but to make sure it's near its target given where we are in the real estate cycle.
So is that allocation part of the equity, or is it independent of the equity allocation?
It's considered outside of the fixed income, so it would be considered part of the equity investment. Yep.
Okay, thank you. Any other questions? Well, thank you very much. Very workmanlike within a set of rules, more akin to a straitjacket than anything else. Thank you. Next item of business is review of investment policy and investment procedures for the fire pension fund, presented by Paul Pugliese and Mike Mounts, Fire Pension Board, and Mary Tomanek of Greystone Consulting.
Mr. Mayor and council member, committee members, thanks for the opportunity to present tonight. My name is Mike Mounts. I'm the elected member, one of the two elected members for our pension fund. I serve as the pension board secretary, and I've been on the fund since May of 2015. My initial presentation here is going to be very brief and just more of how we do business at our meetings, and the more of the investment stuff's going to come from Mary very shortly. First thing I'm going to do is give you guys a brief history and comparison of our fund versus some of the state averages. Is in the last meetings we've had where there was the discussion when the years the investment authority was able to change from the very low ones to what they are now. Our current asset allocation and then our last fiscal year performance, it's just going to be the overall number, and Mary can be more specific on the particulars. So back in 1998, when we were able to go up to 45% in equities, our fund was funded at 98.5%. The Article 4 average was 77.9 at that time. When it went up to 60% investments, we were just shy of 73%, and average was 55.5. And then a year later, when we got the extra 5%, our fund went up a little bit, about a little over 1%, and the average is about the same as well. And just to note that average entails all 4 of the different investment levels, so 0 to 2.5, 2.5 to 5, 5 to 10, and 10 and above. So obviously those numbers can be swayed based on the different levels, the different sizes of the funds. So the big question is obviously, where are we now? In regards to the 65%, our mutual funds, the equities we have there are at 64. Previously, years ago, even after it started going up, when I've done some research prior to my involvement on the board, we were still pretty conservative, and we've worked towards taking the full advantage of that full 65%. So what do we accomplish last year? Obviously, we know that there are 3 forms of income into the fund are going to be employee contributions, employer contributions, and investment income. And 2/3 of our investment, or 2/3 of our income last year was just on investments alone, a little over $3 million. Hold off on that. The other thing is just to give you guys an idea of our quarterly meetings. We go through any regular business that we might have to do, if there's any new pensioners, things of that nature. But when it comes to Mary's involvement with the investment report, she goes through all of our portfolio, all the different asset allocations, where we have money, where would be best to keep it, where it might be best to move it from. We have a very talented group of people. The ability of our 2 mayoral appointees, they just blow my mind with their knowledge based on this stuff, and we really come together as a group very well. With any of those changes, obviously we make those decisions as a group. If anybody also wants to, our next meeting is going to be next Thursday on the 27th. They're public meetings, and we would love to have anybody that would want to come and kind of see how the regular business goes. With that, unless you have any specific questions for me, I'd like to turn it over to Mary Tomanek, who's our investment advisor from Greystone Consulting. She's also been a city resident for over 30 years.
Thank you.
But Mike, I do have one question for you. With the increasing appetite for riskier investments, could you share with us how the board thinks about risk, and have you talked about downside scenarios where you might dial that back? What would trigger you to reduce risk in your portfolio?
Absolutely. So one of the things that we get in the investment report is what Mary has is a scorecard that shows each of the different ones and kind of where we're at with those. The nice part, again, to reference our mayoral appointees, is they're very well versed in the financial world. And so when these things come across, we really kind of rely on them to give us some of that information and to be that knowledge base on it. We never want to be over the tips of our skis with anything. We want to be able to get all that upside and reduce any of that volatility that we may have. So we take all those things into consideration with Mary's knowledge, and then obviously also the other knowledge base that we have from all the people. Our retired member obviously is our former fire chief as well. So he's been around long enough to be able to have a lot of that history, and obviously being kind of the new person on the board, it's nice to kind of look at these, what I like to call human Encyclopedia Britannicas, say where were we, where are we, and where are we going?
Thank you.
Hello, everyone. Excuse me. Thank you for having me come tonight. I value the opportunity to have worked with the city through the Fire Pension Board for many years, and we're very grateful for that. So I also would just, if you don't mind, Alderman Marino, comment on the risk question, if that would be okay. So we have been very sensitive to risk over the years with the investments in the strategy of the Fire Pension Fund, and we have approached that in a number of ways, and we also will be taking a look. We have a very thorough macroeconomic overview that we do, that what are the slides that were in, or the presentation that was in your packet. And Morgan Stanley actually has a number of tools that we focus in on that are forward-looking tools, such as our recession risk monitor. We follow that on a quarterly basis because it has had a lot of success in the past of forecasting recessions. We also are closely looking at the yield curve in terms of a forward-looking indicator of recession, because those are the times from a macro standpoint, the recessionary times are the one where there's most vulnerability to the downside. We have also tried to use the areas of the pension code whereby we can add value with less risk. So if you have dove into the investments that are part of the mutual funds, you'll see an allocation to high yield in the portfolio. And we have used that allocation to high yield as a way to obtain equity-like returns without having the same volatility of the stock market as measured by the S&P. So we do try and be sensitive to the whole risk element. It's very, very important.
Thank you.
So I also had a few slides. And what I thought I would cover tonight would be a little bit more of what we've accomplished over the years, as well as a little bit of background on Greystone, and just a little bit more on our process, if you will. If we go to the first slide, you can see we've, and with some of the other slides you saw tonight, just tremendous growth over the past 10 years. And we've done this on the investment side with a very collaborative approach. And we're also very grateful for the dedication of the trustees that we've worked with over the years, as well as their knowledge level. And we're truly blessed in the city to have so many resources to be able to pull from for the appointed members. So thank you very much. It's been a great group. We use a very unique approach in working with our funds in that we take a very close look at, we lift up the hood and look at the liabilities of the pension fund, and all of the work that we do is customized. So early on, we were able to take advantage of long treasury securities to reduce risk in the portfolio. Again, another option to equity risk. And we were able to profit, if you will, from and get good, very solid returns from an interest rate environment where rates were declining. So again, another way where we were able to take advantage of the code and add returns to the fund. Our historical returns have been very solid versus the benchmark, not only from an absolute return basis, but also with the risk metrics of Sharpe ratio and beta. We also added a lot of value during the Great Recession relative to benchmarks and what many other funds were experiencing. And lastly, we had developed an ongoing process that is operationally efficient for the trustees so that they're able to make changes within the fund in a way that has been very effective in the past. Sorry. Okay. This is Greystone. Sorry for the small print. Greystone is a business of Morgan Stanley. We're the institutional consulting business, and we are supported by a team locally that includes myself and 2 other directors, as well as 9 immediate support staff. With Morgan Stanley, there are over 500 professionals behind the scenes backing up the work that we do. It's a literal army, if you will, and that's with roughly 60 research analysts. So when we come to the board with a recommendation on a fund change or a hire, we've done our homework, okay? Excuse me. Just a few minutes in terms of the strength of our firm as the pension board's fiduciary partner. So Illinois law requires that the investment consultant be a fiduciary, but we would propose that not all fiduciaries are created equal. And the balance sheet that Morgan Stanley has in the partnership as your fiduciary is very, very strong. So we've not only set up a very prudent process and structure and have all of the insurance to back up the work that we do, but we have also created a very deep pocket in the event of something that were to go wrong. So we very much stand behind it, as well as all of the legal resources of our firm that help us in our day-to-day workings. This is our process. There's a lot up here. The bottom line of this and what it means to you is that there's a tremendous amount of work that goes behind the scenes on the process so that all of the decisions that are made at the board level are done in a documented way with the rationale that has the participants in mind. So if anything ever happens, again, there's always the process to fall back on that's airtight. And we also are very sensitive to fees with the fund, and we have roughly, well, it's slightly under 40% of the fund is in passive management. Some of that is fixed income, and also quite a bit of it is equity. So we believe that the whole active-passive decision is something that's very much an active process, if you will, that it comes and goes depending on the level of the markets. And we have access to a robust list of active managers as well as passive strategies, so that as this pendulum does move back and forth, we're able to access both areas, of course, always keeping in mind the fee issue. That's pretty much all I had as far as prepared comments. I would be happy to try and answer any questions that you may have.
Any questions, thoughts, observations? Well, Mayor, thank you.
Thank you
Very much.
All right, pleasure to be
Obviously,
here.
a very thorough process and good results despite going through the deep trough of the downturn.
Yes, yes, and hopefully that was the last one for a
Yes,
very,
for a
very
long
long
time.
time. Correct. Thank
Not
you
the
all.
rest of our working lives, yes.
No kidding.
Well, thank you very much.
Have a good evening.
Other business, the City Council agenda includes a final approval of the fiscal year 2018 appropriations ordinance and rollovers, which requires a public hearing, and we will do that in our regular council session coming up shortly. Committee members also have received the June 2017 flash financials report for the committee's review from Elizabeth Holleb's group. With that, we come to our last item of business, which is an opportunity for the public to address the Finance Committee of the City Council. Is there anyone in the audience who would like to do that? Seeing none, I will ask for an adjournment of the Finance Committee to be followed promptly by the initiation of the City Council meeting. Do I have a motion?
So moved.
Second?
All those in favor?
Aye.
All those opposed? Hearing none, The Finance Committee is adjourned.